Welcome to the Lend Academy podcast, episode number 266. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lended Fintech. Today's episode is sponsored by Lended Fintech USA. The world's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online September 29th through October 1st. This year, with everything that's been going on, there will be so much to talk about. It will likely be our most important show ever. So join the fintech community online this year, where you will meet the people who matter, learn from the experts, and get business done. Lended Fintech, lending and banking connected. Sign up today at lendit.com/USA. Today on the show, I am delighted to welcome Prashant Fuloria. He is the CEO of Fundbox. Now, he only recently became CEO. He was formerly COO. But I wanted to get Prashant on the show because I think Fundbox is one of the most interesting companies in the small business space, and wanted to talk about their approach to underwriting, which I think is unique, and data analysis, and how that has really held them in good stead during the pandemic. And we talk about that as well, as far as the impact of the pandemic, their PPP program. We also talk about open banking, which they have talked about a lot over the years. The integration with QuickBooks is something that is also, I think, pretty unique. And we talk about Prashant's vision for the future of Fundbox. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Prashant.
Thanks, Peter. It's always good to catch up, and I think it's been a while since we got together.
It has been a while. I know my trips to San Francisco are no longer happening ever since early this year. So anyway, let's get started. I want to actually ask you about your interesting collection of guitars behind you there. So are you a guitar aficionado? Tell us a little bit of story about that.
I am a recovering guitar-aholic, I guess. I've been sort of playing jazz, blues, and rock and roll, I guess, for longer than I'd like to admit. While growing up in India, I ended up playing in what became India's largest selling rock band. Unfortunately, I had left to come to the US a couple of years before the debut album was released. And the rest is history, for the rest of the band, but not for me. But that said, I do love playing guitar, and I don't really have like a gigantic collection, but it's sort of think of it as a working man's guitar collection, which gives me enough sort of variety in terms of tones and sounds that I need to play, virtually any kind of music. So that's how I roll.
Right. So in another life, you might have been a rock star and not a fintech entrepreneur.
Yeah. No, I still hang out with a bunch of other tech execs and play in a band called Coverflow at tech conferences and things like that. But of course, COVID has definitely, like a lot of other things, has impacted our style. It's crimped our style a little bit. But no, I'm glad to be able to play guitar. And as you can see, I have power sometimes goes out these days in the Bay Area, given all that's happening with the wildfires. So I have sort of an unplugged backup as well as my electric collection.
Yeah, exactly, indeed. Anyway, so I want to talk a little bit about your background here. You've had a very interesting background working at some of the largest tech companies in the world. So why don't you give the listeners just some of the highlights of your career before Fundbox?
Sure. I think of myself as a sort of tech executive by profession and a product manager at heart, right? Mm-hmm. And maybe a perpetual student too, always trying to learn things. So I grew up as a product manager in the early days of Google. So I was part of the AdWords team, and the AdWords team was very, very small and built out a very large part of AdWords business infrastructure. Also along the way at Google, I did dabble in fintech. It wasn't really called fintech at that time. I built out Google's global billing and payment platform, just so that we could power the ads business in all sort of the countries around the world. And this was at a time when global payment networks weren't really a thing. And so how do you go and collect money in China or distribute money to publishers in Brazil was like a really big deal for Google because of our global ambitions. And sort of I built that out. And eventually, when I left Google, I was running all of Google's products for the APAC region. So spent a lot of time in Japan, China, Korea, India, Southeast Asia, Australia, New Zealand, all those markets. And I left Google to go to Facebook. And once again, I ended up at a tech company that was very young and in sort of the early days. And for the first couple of years at Facebook, I ran the ads product at Facebook, a lot more controversial product these days, as it turns out. And then for the next couple of years, I did the same thing. I ran the payment platform. So I built out the payment platform at Facebook as well. So I know enough to be dangerous in payments, having done that at two different tech companies. But I also think that the world's come a long way over the last 10 years in terms of sort of payment rails and global payment, global payments as well. Mm-hmm. After Facebook, having enjoyed and learned from the search wave and the social wave, I thought about the mobile wave and ended up joining a startup called Flurry, which was actually at that time the world's largest mobile analytics platform. Wow. Embedded in over 2 billion devices, monthly active devices. And so we were seeing data about the mobile revolution really from all over the world, from the Western world to India, to China, to Latin America and so on. Yahoo acquired Flurry, and then for a while I was at Yahoo, once again ran the ads and data team there. So a little bit of a pattern. By the time I left Yahoo, I was frankly tired of doing ads and advertising and marketing systems and solutions and things like that, and was thinking about what to do next. And I got introduced to Eyal. And right when I saw Fundbox, I think three things just hit me like a ton of bricks, right? One was, whoa, the mission of the company to serve small businesses is something that I could relate to and just felt very real. So I was like, well, if I'm going to get up in the morning and go to work, I may as well do that for something that's interesting and motivating. Like the second was a really good team that I did. It was a small team at that time. We were much smaller than we are today, but just really smart folks that can work together really well. And the third was the technology, because even at that time, though we were very early stage, I could see that the team had built in just 3 short years some very cool and differentiated technology, and the tech team was at the same level or better than any team that I'd worked with at Facebook or at Google, and so I was very, very impressed and came on board, and here I am 4 years later partnering with Eyal, who's the founder, until recently the CEO, and just helping Fundbox grow and helping us serve our customers.
Okay, so then maybe you could just tell the listeners who don't know Fundbox really well, how do you describe it today?
Fundbox is a fintech company that is focused on helping small businesses and powering the small business economy through innovative credit and payment solutions. That's what we do. And we work with small businesses today in the US, but we do have global aspirations. But these small businesses are across a broad spectrum of industries and segments. And we help them by providing them access to working capital and other tools that help them with their financial agility and peace of mind and ability to succeed and grow.
Mm-hmm. Mm-hmm. And you mentioned Eyal just recently. He was CEO until a short time ago. So just tell us a little bit about that transition. For you were COO, and tell us a little bit about what was behind the thinking there of you becoming CEO and Eyal stepping back a little bit.
Oh, sorry to let you down, Peter, and your viewers as well. But the transition was like a huge non-event. Eyal and I have been working together very closely for the last 4 years. And a year ago, we decided to make a transition. It was very smooth and very gradual. I was managing the core business and a large part of the company before. So it was very smooth. And Eyal is still very involved with the company as an executive chairman. He and I talk every day. And frankly, the only meal that I've eaten outside of my home, where I am today, is a meal with Eyal. So, we're working very closely together, and it's just, he and I are sort of focused on, sort of different things. He's thinking about the company's strategy, longer term, capital markets, strategic investors, strategic partners, things like that. And I'm a lot more focused on like running the company. So it's been a great partnership, and I hope and expect it's going to continue for a very long time.
Okay. Okay, fair enough. So, I went back and looked at my notes from some of the meetings that I've had with you over the last couple of years, and you said this several times. You talked about the $3.1 trillion problem in the United States of money that's locked in receivables. So, maybe you could just tell the listeners a little bit about how Fundbox is addressing that problem directly.
Yeah, happy to do that. So just by way of context, that $3.1 trillion represents all the money that's owed to a company, sort of to a business in the B2B space at any given time. And about a third of that is money that's owed to a small business. So it's a lot of money, and $1 trillion is very, very significant. You can compare it to other big numbers like total consumer debt or total mortgage amounts and so on in the country. The challenge with this money that's owed to small businesses is just the opportunity cost. It's just how the economy is not operating efficiently. You can think about all the investment decisions and the operating decisions companies could make better if they were to simply get access to that capital or have more confidence in that capital showing up. And the problem is more pronounced for small businesses, and it's a third of that number, and it's a number that's rapidly growing. So I think that over the course of the last year, the amount that's owed to small businesses has almost doubled. So it's a very, very significant impact on small businesses that's sort of been made worse or exacerbated over the last year, actually over the last 6 months. So with that problem in mind, we're working to address that problem, to solve that problem, and sort of primarily through credit, and that's sort of what we're primarily focused on. So we've got sort of a few different flavors of our credit products, and through COVID and through the pandemic and the downturn, we've not stopped originating, we've not stopped serving our customers, and we believe that's an important way for us to make a dent in this huge problem. We've even continued acquiring new customers during this time, and this access to credit has been incredibly important for them, as you can imagine, through all the ups and downs, a lot of downs in there, over the last few months. I mean, the other thing that we've done, which is of course more of a one-time thing, is that we've also obviously acted as a lender in the PPP program. Mm-hmm. And so through August, we worked with the Small Business Administration and the Treasury to be able to originate loans to our customers, but also other SMBs. And rather than acting as an affiliate, so there are a lot of folks who essentially bought traffic and acted as an agent, pushing that traffic to a bank to be able to actually originate. We decided to go all in and originate ourselves. And we did that because we wanted to deliver a better customer experience to the tens of thousands of people that came to us looking for credit and whom we served. By sort of managing the entire experience, we were able to just drive more customer delight than in getting someone in and then moving them over to some other institution. And so, if you just take a look at what the impact has been, apart from the obvious financial impact of the company, it was sort of very profitable for us, and we did very well through that. I think more than that, we've built up an incredible amount of goodwill in the SMB community by helping. And if you just look at our Trustpilot reviews and how glowing they are, it's a matter of great pride for us. We're very, very happy about that. And I think that's sort of another way in which we sort of helped. And we're going to continue looking for ways in which we can help with this $3.1 trillion problem, of which over a third is related to SMBs not getting paid for something that they have done, a product they have delivered or a service that they delivered.
Mm-hmm. Mm-hmm. Okay, so then maybe you could just tell us a little bit about who you are serving. You talk about small business. Obviously, there's many verticals. Are you like broadly across all verticals? Who's a typical customer of Fundbox?
So our customer base is very broad. So in terms of geography, of course, we're focused on the US today, but the heat map of our customers looks pretty much like the heat map of small business activity in the United States. In terms of verticals, we're not concentrated or over concentrated in any one particular vertical or segment. We serve professional services or scientific technical services on the one hand, all the way to retail, B2C, to manufacturing, to B2B wholesale, to construction, to just about any industry segment. And that's just because our aspirations are very broad, and we want to be able to serve a broad set of customers. In terms of size, we typically serve customers that are on the smaller end of SMB. And as you mentioned, Peter, SMBs, some definition of SMBs take you all the way to a company that has up to 500 employees. Our customers tend to be on the smaller side, so ranging all the way from a sole proprietor to someone who has 10, 15, 20, maybe up to 50, but not much more than that by way of employees, generating as little as like $100,000 in annual revenue to maybe a few million, but not 50 million, right? Like a few $1 million. And our kind of median revenue is roughly in the $700,000 dollars a year range. So that's roughly the size of the customer. And we've focused on this for a reason. Actually, there are two reasons which actually dovetail together very well. One is that this is highly underserved. So the smaller end of SMBs is the place where there's the most amount of pain, for reasons we can get into, but just the mechanics of assessing risk and underwriting become very, very challenging using conventional techniques and the payoff is smaller because it's a small customer. They're not asking you for $1 million product. They're asking you for $25,000 in a line of credit, right? And so that's one part. It's highly underserved. And actually, by serving smaller customers, we're also that's a place where technology and automation and machine learning can just play more effectively because there's scale there. So this is sort of a place where there's actually like a happy, sort of a happy combination of both a strong market need, which has not been addressed, and the opportunity for us to just use our approach, which is really much more of a technology-based approach, to be able to serve customers at scale.
Mm-hmm, mm-hmm. Okay, so I want to talk a bit about that approach, particularly the approach to underwriting, because I've talked to a lot over the years, and it's you always talk about data analysis and data science and machine learning, and really what you've said is a unique approach to how you address underwriting. So maybe can you give us a little bit of color there on what makes Fundbox unique?
Yeah, no, happy to do that. And before I say anything, I'm going to caveat this by saying that almost whatever I say can be said by almost anybody, right? And ultimately, the proof of the pudding is in the eating and the performance. But here's how we think about what we've done. Over the past 7 years that we've been around, we've made a lot of deep investments in capital, in people, in our focus and energy for sort of long-term superior performance. And we built a significantly better sort of data and credit machine, which is coming to bear and showing results now, and which we'll talk about. But a few things that are pretty important for us. Number one is we've made a huge investment in data. And I'm going to give you a couple of flavors of that. When you think about data, you think about making predictions. So the first is really around the labels that you can use, the outcomes that you can train your machine learning models on, right? And what we've done is every time we encounter a new data set, we're pretty aggressive in how we onboard customers and let them get access to credit and see what happens. Because it's only by having a pretty broad aperture and letting a lot of customers come in, can you collect enough defaults to train a machine learning model well. So we've not been shy about saying, let's take some risks in terms of the customers we bring on in the early days of any segment, whether the segment is a part of the market or a data source that we're anchoring on. And let's not be shy about making dollar investments in those. So in other words, losses, which help train our models, do come at a dollar cost because you're losing principal, and that's a big deal. But we've been very explicit about making those investments within the company, with our investors and so on. So that's a big thing. Another flavor of data investment is spending a lot of time in engineering the features, or think of it as the variables that go into models. So we access a number of data sources. Many of them, I would say most of them, are not proprietary. We get access to bank account data. Frankly, anybody can access bank account data. It's getting more and more open. We'll talk about open banking hopefully later in this thing, but we access accounting software data. That's available to everybody too. But what you do with the data you have access to, how much time do you spend trying to understand and develop features from all the thousands of data points, and then how you look at the power of each of these features is like a really big deal. And so this is something that we've been working on for ever since the company started, such that we have a very significant edge over anybody else when it comes to even extracting features from generally available data sources. So I think the combination of one, having a large body of defaults that we can train our models on, which is awesome. And then the other one, spending a lot of time on feature engineering. These are investments that no one can replicate in 6 months or a year, or maybe even 2. This takes time to build out, and we've done it. I think the other thing that we've done, there's a lot of things. One thing in particular, which I think is pretty unique about Fundbox, is that we've been investing in something, and this is proprietary, that we call the business graph. So when a customer comes to us and connects their accounting software or connects their bank account, what we're able to do is to understand a lot about the customer, but not about them as an island. We think about them and their interactions with the other businesses that they work with. So this is more important in the B2B context. But imagine if every customer that came to Fundbox brought along some information about between 1 to 200 other businesses around them. This could be suppliers, it could be customers, and so on. And so by putting all of this in a graph, we've built out a graph of businesses in the US and their interactions with each other. And of course, the graph is not perfect. We don't have every single small business or large business in the US, and we don't have every transaction, but we do have a lot of it, so that we can derive features from this graph that can help us explain or predict the risk of a business based on the company they keep, right? Based on the businesses around them. So that's a pretty big thing. And, and along the way, there's also like a whole bunch of statistical techniques, that how we approach sampling, how we structure our models, how we create human readable ways to explain the results of our models to customers. All of that is stuff that we've developed. So it is a significant investment. And I'll tell you this, Peter, like going through all of this over the last almost 4 years, you always ask yourself the question, everybody's saying the same thing. So is it really worth it? Is what we're doing worth it? And then in a few short months, you get the answer.
Right.
When the environment goes from being benign to being, what we're in right now. And the light bulb went off in my head, and I was like, whoa, this actually was worth it. The approach actually made sense. But it's hard, and it's easy to doubt when everybody's saying, almost exactly the same thing. What I just told you over the last 2-3 minutes could have been said by anybody. It's easy to say, it's hard to do. And it's the proof is in the actual performance.
Right. Well, so let's talk about that then. I mean, you've had, we've gone through a very rough 6 months. Obviously, you've had the PPP, which has sort of helped prop up many small businesses. But tell us a little bit about what you've seen loan performance wise, from the start of the year.
Yeah. So I think that we've had very strong performance with our loans, sort of as measured by on any metric. So let's take delinquencies, right? So when COVID hit, our delinquencies have been in the low single digits percentages, right? When COVID hit, we saw a temporary spike. We saw delinquencies rise from low single digits to high single digits, never hit double digits at all in terms of percentages. And that happened for like a few weeks, and then they dropped. And so within 5 to 6 weeks, we were back at pre-COVID levels. And for the last 2 months, they've been at significantly below pre-COVID levels. So while we did have some sleepless nights, worried like everybody else was, like, is this the end of us? What's going to happen? we saw things play out in a way that really gave us a lot of confidence in sort of our approach, which is our delinquencies never even ever got to double-digit percentages. Now, if you compare this with sort of the story at almost virtually every independent fintech credit platform, the story was more delinquencies rising in the 30 to 40%, at the peak and remaining there for a longer time. So when we looked at the portfolio performance of either publicly traded companies, some of which were in the news for getting acquired, right? Or some of our larger peers, again, in the private sector that also were in the news for getting acquired, we're talking about delinquencies in the 40% range. And so if you think about a 40% delinquency rate versus a 8% delinquency rate, we're not just talking about, just a few percentages better. We're talking about a 5x difference in performance. And it was so significant that we really had to look at it over and over again and think, are we making a mistake here? Like, can it be real? And it is real. It was a very significant difference. And that's when over time, just the investment in the approach just seemed to be so real and so much grounded in the reality of actual business performance. There's sort of this joke that floats around, which is, if it's written in Python, it's machine learning. If it's on a PowerPoint slide, it's AI. There's a lot of PowerPoint slides floating around, and it's just good to see something real, deliver performance, for a change.
Right. Yep. For sure. So then, what about demand? We're now more than a month away from the end of the PPP. Are you seeing demand come back strongly, or tell us about how that has flowed over the last few months?
So demand has been growing as the stimulus funds are running out, and we see all this because we're connected to the bank accounts of our customers, and obviously we participate in the PPP program as well. And so we're seeing demand come back. I think there's definitely a need for credit given the macro environment, right? That's there for sure. There's also a need for credit given that supply has dried out. So with some of the players not being in the market anymore, in fact, I think we were almost surely the only independent fintech to not stop originating. Everybody else did. Even some of the larger platform players did. Mm-hmm. So there's sort of this imbalance between demand and supply. And so we are seeing demand coming in. And so I think this is where we talked about sort of focus. And I think the biggest opportunity we see for us right now is we've proven that our technology works. We've got a very strong sort of momentum in terms of customer goodwill. And really, how do we make use of that? And the place we are in the market is something that we're working very hard on right now.
Mm-hmm, mm-hmm. Yeah. Okay. So I do want to talk about open banking. You mentioned it a few minutes ago, and I feel like you guys have, in some ways, become the de facto pioneer in open banking in the US. We obviously in Europe, where it's mandated regulation for the open banking is required by all large banks. But how do you view your approach to open banking?
Yeah, I think Peter, we've been talking about open banking for more years than we should have been. I think because it's not moved perhaps as fast as we would like in the US and so on. Look, I think of open banking very much as, an engineer might think about technology platforms, right? You want to be able to put together different technologies, different services to ultimately do what you want, right? And so very, very literally, the idea of owning your data as a consumer or as a small business and being able to do what you want to do with it, enabled through technology and through permissions, is really, really important. And I think, but if you just take it a little bit more broadly, I do think this is where fintech more broadly is headed, which is that fintech will succeed if and when it is able to reimagine and repackage sort of a financial service in a way that makes sense for the customer, by taking what's there, whether it's data from a bank account or data from your credit cards or your accounting software or something else, and putting them together ultimately to serve the customer, right? So that's the single most important thing. How do you serve the customer well? By pulling together all the data and the technology assets that you have. I mean, we think about open banking from the perspective of customers coming to us and saying, look, I have a bank account. I want you to be able to look at it because I'm looking for working capital, or I have an accounting, I have a set of invoices lying in my QuickBooks, and I want you to be able to take a look at it because I would like to be able to advance working capital against those invoices. It's all of these things. And so the general idea that, one, the customer is in charge, right? And they are coming to us and saying, I've got this and I've got that. And I don't want to have to, upload a PDF file because that's just too much of a waste of my time. Yes, exactly. I want to be able to authorize you when I want to look at data and just help me, serve me better, right? That in my mind, sort of this is my romantic idea of open banking, which is the customers get what they want the way they want. And the sort of technology, sort of whether the APIs and the permission and so on, are able to make that happen. So we've been pushing that, obviously, and our customers benefit from it. And there's also a change in sort of customer expectations, right, around all of this stuff. So 4 years ago, when I joined Fundbox, sometimes we would lose customers who would look at our flows and say, this is a scam. Like, I cannot believe that you are connecting to my accounting software and within a minute giving me credit. Like, there's something not right here with this picture. It's too easy. And now, 4 years later, people are starting to get, yeah, that's the way it should be. Like, it should be easy. It shouldn't be hard. And I'll tell you what, in a couple of years, people will be demanding it. And if it takes you more than a minute to figure the stuff out, like, they'll be upset. And that's good. That's good because customers are getting what they want and what they need. So yes, it's a journey. It's a journey. It hasn't, it's not been easy, but we're every step forward, every bank that integrates better, every software SaaS platform that lets customers share their data, we believe is sort of another step in just opening up all of these assets that actually belong to the customer and driving better sort of financial services through technology.
Right. Okay, so we're running out of time, but a couple more things I really want to get to. You've mentioned QuickBooks several times, and I know that you pull in QuickBooks data, but I think I read somewhere as well that Fundbox is now available inside QuickBooks. Right. So tell us a little bit about that.
Yeah. So we're embedded inside of QuickBooks. I think we're perhaps the only fintech player to be natively integrated inside of QuickBooks. We love working with the QuickBooks team, and we've been doing this now for 4 years. If you're in your QuickBooks product, you might see a call to action against your invoices around getting working capital. And when you engage with that, it's a QuickBooks branded experience powered by Fundbox, but it's very native to the flow. And what's beautiful about that experience, and we're excited about it, and so is the QuickBooks team, is that for the customer, it's like I click a button, I authorize Fundbox to take a look at my QuickBooks data. But frankly, it's single sign-on. There's no login that I'm creating. I don't have to do anything else. All my QuickBooks data is there, and Fundbox just verifies with me, like, are you, who you say you are? For obviously for regulatory purposes. But it's a minute, and I'm in, and I have access to credit. So it's been working very well. We also have QuickBooks customers who come to us sort of outside of the experience, and there we're using the QuickBooks APIs just like anybody else, because QuickBooks is also a platform, an open platform, which is great. More power to them for doing that. And so we work in both ways, in this broader way, but also a very important part of our partnership is the sort of more embedded nature that we have.
Right. Okay, so last question then. What's your vision for the future of Fundbox? I feel like you can take this a number of different ways, but I'd love to get your perspective on where this is going.
So I think that, going back to a point I made earlier, I think we want to serve the small business owner. We want to serve the small business. And we believe that despite all the advancements we made in the last, as an industry over the last decade, the SMB is still very underserved at a broader level. And today, Fundbox has been able to reimagine credit for the SMB by using technology, by rethinking certain things. Like, for example, we actually understand what you mean by your invoices, whereas a traditional bank might not, because we see the invoice data, we understand the counterparty on the invoice because of our business graph, all of those things. But that's sort of one part of your existence. In general, I'd say SMBs are just underserved and generally have been failed by the existing system on multiple fronts, sometimes in credit, sometimes other services. And so we're really focused on thinking about how we can take all these building blocks that we've got by way of technology and so on and so forth, and reimagine other experiences for small businesses to really give them the tools they need to succeed, the financial agility, the peace of mind. And so we're very focused on, I think, on two things. One is, the credit products that we have today serve a need. The technology is proven. We've created great customer delight and momentum. We want to be able to do a lot more of that. And so that's like a really big thing for us. And the second is, we want to be able to serve these customers more broadly. We see time and time again from our customer feedback, from what we hear anecdotally, from how they're currently being served or underserved by banks and traditional financial institutions, that there's a huge, huge opportunity. So that's what we're working on. And it's obviously no one wanted COVID to happen. And there are so many challenges in the world today. But I think the silver lining for us is that we've been able to prove the validity of our approach through like a terrible downturn in the economy. And we want to be able to sort of scale up how we serve customers, both in terms of the number of customers we serve, but also in the ways we serve them.
Mm-hmm. Okay. Well, good luck with that, Prashant. It's always great to chat with you. I really appreciate you coming on the show today. Okay.
Thank you so much, Peter. Take care.
Okay. Bye. I want to go back and talk about that business graph that Prashant was mentioning. I think it's hard to overstate how big of a deal this is, I think, for small business lending in general, because as we move forward, I mean, the data is only going to get more rich, and that, Fundbox has said they've already got connections to not all, but most of the small businesses in this country. And as that graph gets wider and deeper, I think you're going to see it's going to be a very powerful tool for those that have access to it, because you're going to be able to, you're able to see problems in industries as they're just getting started, because so many businesses are interconnected and doing business with each other, or doing supplier or customer relationships. And I think this is really one of the most exciting things about small business lending that we're going to see really kick up this decade, that you're going to have so much more data at your disposal. And it's those companies that can really, parse that data, interpret the data into really helping them make meaningful decisions that are going to have a distinct advantage. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend It Fintech USA. The world's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online September 29 through October 1st. This year, with everything that's been going on, there will be so much to talk about. It will likely be our most important show ever. So join the fintech community online this year, where you will meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Sign up today at lendit.com/USA.